Let's take a moment, look at the disclaimer. This content is for educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to tell you how BTA analyzes the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top. But we do make money in the middle. Okay, this is an end of day update for Wednesday, June the 29th, 2022. And what we're going to do now, we're going to look at the Major Market Index ETFs. And we're going to start out with the DIA, the ETF that tracks the Dow Jones Industrial Average. This is a daily chart of DIA, and we're going to look at our key moving averages. Let's expand in here. And as you can see, we got rejected yesterday. Okay, yesterday prices got rejected on Tuesday at the 21-day moving average. And it was a key reversal day, but like I said in yesterday's update, the volume wasn't above average. So when the volume is not above average on a key reversal day, it's not as strong. But it was a key reversal day. And today, we traded pretty much flat. Okay, the DIA was up 0.3% today. We closed up 92 cents on the DIA. Okay, 0.3%. But what's more important is that where it closed at. It opened and closed almost at the same spot. All right, and it opened and closed directly on the 5 and the 9-day moving average. As you can see, the 21-day moving average right now is acting as overhead resistance. Look at that yellow line. Look at that yellow line up top on the above this yellow moving average line. Look how it's holding that overhead resistance right now. Okay, the 21-day moving average. So we got to see how it plays out tomorrow and going toward the close on Friday, the rest of the week. But right now, this doesn't look good. Okay, we're getting resistance at the 21-day moving average. Now we mentioned this on Monday. Okay, when we had our session, our weekly session on Monday, that the 21-day moving average was acting as overhead resistance, and right now it's definitely playing out that way. Okay, so you can see the rounding here of the top and the overhead resistance at the 21-day moving average, the yellow line. So let's see how it works out tomorrow. Well, today, like I said, was up pretty much flat, only up 0.3%, 92 cents, and you see the volume was lower than the previous day. Okay, so let's take a look at the structural chart for the DIA. Okay, I noticed something very important on the structural chart for the DIA, and notice we stand right below this internal trend line here. Let me bring this up. Let me expand this a little more so you can see it, and let's zoom in. Okay, we got this internal trend line right here. Okay, acting as overhead resistance right here. Okay, this internal trend line going right across here, and we got an overhead resistance level right here at 312.53. 312.53. We closed at 310. So we got to get above this upward trending internal trend line right here. We got to get back above this. Okay, and then we got to get above this 312.53 level before we can look for anything to the upside. Okay, we can't go long until that happens. Now, below that is some key support right here, going back to the lows of the double bottoms, okay, that we had earlier this month. We got the first level at 306.28, and then we got 305.26. So we got some support levels down here. If we break those, I wouldn't be surprised. Okay, excuse me. If we break those, I would not be surprised to see this thing go back down to the 295 level for the DIA. I would not be surprised, and it test these previous lows. I would not be shocked if it does that. Okay, now let's look at the momentum real quick. Let's look at the momentum. Okay, let's bring this chart up right here. You can see the RSI, all right, is stalling right at the 50 level. All right, let's zoom in so you can see it. You can see that we got right up to the 50 yellow, this yellow line. We got up right up to the 50 level here. We traded up to it and we pulled back. Right now we have 44.31. Okay, we got to stay above 40. If we start breaking down below 40, then I think the momentum is definitely going to be out of the DIA. And you can see the check and money flow down here has turned red, and it expanded today. Okay, so the money is coming out of the DIA right now, and the momentum is still on the wrong side of the 50-yard line. We still on the wrong side of the 50-yard line. Okay, as far as the RSI is concerned. Now it's interesting that the stochastic here, if I bring this over, all right, the stochastic today gave us a bearish crossover. Right now it's starting to cross over. That's very interesting. Okay, we got to be careful with that. Let me zoom in so you can see it. You see that yellow line crossing below the blue right here on the stochastic? If you look very closely, you can see the yellow line crossing below the blue. That's a bearish crossover. Okay, the MACD still has a bullish crossover, and the MACD line is still above its signal line, but the stochastic right here has given us a bearish crossover. All right, and the KST is still in the negative. So we got to be very careful. Okay, the momentum may be shifting to the downside for the DIA, and we see that price is stuck below the key moving averages right now and trading right at the key moving averages. We see that. So now let's take a peek at the volume real fast. The volume is not there. Okay, you look at the on-balance volume line right here, the yellow line, the on-balance volume line. You can see that the volume, okay, is still shifting to the downside. This is the previous high. If you put a line right across the previous high right here, okay, this is the previous high for the line chart of closing prices up here. Well, price is still above its previous high, but you can see the on-balance volume is well below it, okay? And the volume is shifting to the downside. Look at the accumulation distribution line. It's turning down, okay? So right now, volume is not really there, okay? Prices is trading below the 21-day moving average, okay? And we're being stuck right at the 5 and the 9. So the DIA, okay, is in a dangerous position right now. All right, it's in a very dangerous position. You got to be careful right now. All right, in the daily charts right now, it's telling you to be very careful. Okay, be very careful. It will be no surprise if this market does not fall apart, right? Because you see what's happening. In order for it to go into a sustainable rally, well, we got to get above the 21-day moving average, which is at 313.62. That's the bottom line. Okay, let's look at the SPY, the SPY, the ETF that tracks the Standard & Poor's 500, and let's see what we see on the SPYs. Okay, all right. Please forgive me. Give me 1 second. Let me bring this down. Let me bring the chart down. Expand it a little bit. Okay, let's take a look at the SPY, the ETF that tracks the Standard & Poor's 500. Okay, if you notice here, we close right below 380.54. 380 is the level on the SPY. Okay, 380.54 right here is the level on the SPY. All right, we got to get back above 380. Okay, 380.54 is the level. This horizontal resistance area right here is the level. We closed right below 380. Okay, 380.54. We closed at 380.20, right below 380.54, and we right on this downward trending internal trend line. Okay, so that's a key area. All right, for the Standard & Poor's, we got to get back above 380.54. If we can't get back above 380.54, and we break below this downward trending internal trend line, I would not be surprised if we don't go back to 371. Okay, I would not be shocked if we don't trade down. If we break below, if we can't get back above 380.54 on the SPY, okay, we can't get back above 380.54, and we break below this downward trending internal trend line right here, I would not be surprised if we don't trade back to 371 before the next area of interest, before we have another area of interest at 371. Okay, 371. we break below the 371 level in this next internal trend line here, I would not be surprised then if we break below this internal trend line here and this horizontal, which we need a level that needs to act as support at 371.63. We break below that. I would not be shocked if we don't go to 364.38 and then start trying to test these lows right here. So we got to be very careful on the SPY. The SPY is sitting at a very peculiar level, okay, that can act as some serious support. If we break that level, if we break this level on the SPY, we got to be very careful, okay? 380.54, we're below it. If we can't get back above it and we break through it and stay below it, it could be a problem, right? And I'm going to show you something that relates to that. Let me go there right now, okay? If you look at our structural chart, right? This is our workspace where we do our index comparisons. Let's go to the Standard & Poor's 500 itself, the actual index itself. That 380 level, right? 380.54. Well, where is the actual Standard & Poor's 500? Where is it sitting at right now? This is important stuff, y'all. I hope you're picking up the jewels that I'm dropping. I hope that you're picking up the jewels that I'm dropping. Where is the Standard & Poor's 500, the actual index itself? Remember, the ETF tracks the Standard & Poor's 500. Do you see here, right here, we closed at 3,818. You see this level, this fractal, this horizontal red line? That's a long-term weekly support level at 3810. Basically, the 3,800 level, a big round number, 3,800. If we break below 3,800, now you got to look out below. It could be some trading to the downside. We closed right now. We tested it today, and we got right back above that 3,810 level, basically the 3,800, and we closed today at 3,818. If we break below that 3,800, this support level right here, well, then you got to look out. It's a strong possibility you could come down and drop another 100 points on the Standard & Poor's 500, the actual index itself. So you see how you add a key level, not only on the Standard & Poor's 500, the actual index itself is at right now at 3,800. It's right at the 3,800 level. Okay, so look at that. Okay, now and where is the DIA? Okay, I'm sorry, I've been saying DIA. That's the Standard & Poor's 500. It's right at the 3,800 level. The Standard & Poor's 500. I hope I didn't mistake that. The 3,800 level is the Standard & Poor's 500. Okay, it's right on this support, the 3,800 level. Okay, the actual index itself. So now, where is the S&P, the ETF that tracks it, the SPY? Okay, the SPY, like I just showed you, is sitting at the 380 level, 380.54. Okay, so if we right at the 380.54 level right now, we at 380.20. So if we stay below 380 and we break below the 3,800 level on the actual index itself, the Standard & Poor's 500, that can be a problem. This is what I'm trying to tell you. So we are at a critical point right now. You have to be careful. You have to be careful. I'm trying to tell you something. I hope you picking up what I'm dropping down. Okay. Now let's look at the key moving averages real quick, right? Look at that. Okay, you see it. We found resistance at the 21-day moving average, just like the DIA. The SPY has found resistance at the 21-day moving average, okay? And it just closed below the 5 and the 9, all right? It just closed below the 5 and the 9. And we found resistance at the 21-day moving average. You see it right here, okay? This is the 21-day moving average. We closed below the green moving average and the white, which is the 5 and the 9, and they're directly together, right around 381.62. We closed at 380.20. Okay, so this is not a good position for the SPY. It's in a bad position, just like the DIA. Okay, so we have to be careful. If this continues, I might be taking a short position. I'll have to take a little nibble to the short side if this continues. Okay, we break below that 380 level conventionally. Well, we already below it. We at 380.34. The resistance level, which was actually the support level, was 380.54. We at 380.34. If the Standard & Poor 500, the actual index itself, can break through 3,800 and try to close below 3,800, then I'll see no reason why I may end up taking a short. Okay, because that's going to be telling me something right there. That's a key level. That's a key level. And if you look at the stochastic right here, look at the stochastic, just like the DIA, the SPY, the SPY, just like the DIA, we have gotten now a bearish crossover where the yellow line is crossed below the crayon line. Okay, that's a bearish crossover on the stochastic. So now the stochastic is starting to cycle down. Okay, that's not good for the DIA, especially the SPY or the DIA, because they both have the same cycling down on the bearish crossover on the stochastic. But what's not good is that we just had a fall today. This is not the type of action you want to see when you get a fall today. This is just not what you want to see. You want to see prices trying to move upward a little bit, okay? And you want to see these momentum indicators turning up. But look at the RSI. You see where 50 level is at. Here's the RSI line. It got right to the 50 level, and it's pulling back. It's at 42.96 right now. This red dotted line here is the 40 level. This thing start getting back below 40, it's a problem. The stochastic already gave you a bearish crossover. The RSI got resistance at the 50 level, and now it's straightening down. If it break below 40, that's not good, okay? But look at the Chaikin money flow down here. You can see the histogram is expanding to the downside, and it's in the negative. So the momentum, the money is coming out of the Standard & Poor. That's what the indicators are telling us. The momentum is on the wrong side of the 50-yard line, and that the sellers are in control. Now look at the stochastic, and not the stochastic. I'm sorry. Look at the on-balance volume line here. This yellow line. Okay. Look at the on-balance volume line. The volume is clearly coming out. Okay. The volume is clearly coming out, and now the accumulation distribution line is also turning down for the Standard & Poor. This is for the Standard & Poor 500. So the SPY, the ETF that tracks the Standard & Poor 500 rather. So you can see that it's a lot of downside momentum, and we closing below key moving averages on the daily chart. Let's look at the Qs right now. Let's look at the Qs. Okay, let's look at the Qs. Let's go to the structural chart. Well, let's look at our key moving averages first. Look at the key moving averages for the Qs. You see, we got rejected right at the 21-day moving average. All of the major index ETFs right now we looked at, it failed at the 21-day moving average, and it got rejection. Okay, look at the Qs right here. You got this downward trending 21-day moving average right here. See how you got rejected at it right here? You got above it, but you couldn't hold it. We had that key reversal yesterday, broke clean through it. Okay, so we below the 21-day moving average for the last 2 days, and we closed below the 5 and the 9 for the last 2 days. That's not what you want to see when you have a follow through day. We're back below the 5-day moving average. What I tell you, when you're below the 5-day moving average, when the stock is closing below the 5-day moving average, it's nothing to talk about. We cannot go long in those circumstances. All right. So it's nothing to talk about. We're back below and closing below the 5-day moving average. It got rejected at the 21-day moving average. That's not good. Are you picking up what I'm dropping down? You got to be careful. Okay? If you don't, you might get your head handed to you. I don't want to see that happen. This is not financial advice. You know I can't give financial advice. But wouldn't it be wonderful if it was? But it's not. But if it was, ching, 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 ching. But at least you would not lose a lot of money. Look at the momentum indicator, the RSI right here for the QQQs, daily chart of QQQ. You got right up to the 50-yard line here, the 50 level, and they got rejected. And now we're below the 50 level. And for the Q, look, we got to be careful. We break back below this red dotted line, dashed line here. That's the 40 level. We get back below that, the momentum is clearly out. Okay, look at the check and money flow expanding to the downside. Tell you that money is coming out of the Qs. Okay, the check and money flow is telling you money is coming out of the Qs. The Qs have momentum going to the downside, and you see right here, the stochastic has given you a bearish crossover on the Qs also. You see that. Okay, the yellow lines cross below the crayon line. The stochastic is telling you that that is recycling, okay, to the downside. The momentum is turning to the downside. All right, we have to be careful. We getting the same picture right now on all of the major index ETFs that we're looking at. Let's go to the on balance volume. Okay, you can see that the on balance volume right now, the volume line is trying to hold up right now for the Qs. That's a fact. All right, so if I put a horizontal line across the on balance volume previous high, okay, so you can see price on the line chart of closing prices here. This is the previous high. Price broke above it, came back and flattened out right at it. Where here's the previous high for the on balance volume. Here's the previous high for the on balance volume. Price broke above it, came back below it, but now it's trying to peek its head above it again. Look at the accumulation distribution line here. Let's put a horizontal line right across the accumulation distribution line. Look, if you put it right across there, you can see the accumulation distribution line, the red line, okay, is trying to stay above its high. All right, but right now, the price action is telling you to be careful. Price is the only thing that pays. We definitely look at these other indicators to give us clues to what may happen, but price is the only thing that pays. And right now, price is below and closing below a downward pointing, 5-day and 9-day moving average. I cannot go long that, point blank and period. Okay, so now let's look at the key moving averages on the IWM. What do you see? Rejection at the 21-day moving average. That's clear. Prices got rejected at the 21-day moving average and it's closing below the 5 and the 9. Here's the 21-day moving average right here. Prices got rejected off of that. And now we're closing below the 5 and the 9. Okay, and the 5 and the 9 is starting to turn down slightly. All right, the only good thing on this chart right here is that the volume is not expanding when prices are moving to the downside. That's the only good thing for this chart right here. If you notice, the volume is still below average and it's kind of getting smaller, but prices are trending down, well, turning down rather. Okay, well, that's the only good thing. It's telling you that they're not completely dumping it right now. Okay, because the volume is not above average and not higher volume than the previous day. So it's telling you that they're not completely selling it out. But the price is still trending down. You don't need a whole lot of volume when prices are collapsing. Prices can fall on its own weight. Don't ever forget that. Prices can collapse by its own weight. Okay, you don't need the volume. When you see the volume, you know they selling out. Okay, now look at the IWM. And what do you see? I hope I ain't got to say it. You see that big, thick red line sitting right there? You see that big, thick red line right there. You see that big, thick red line? You see that big, thick red line? I think you know what that is. If you've been following me for the last couple of weeks, you know what that is. That's the March 2020 highs, right at 170.56. We closed at 170.69. We came down and tested the 168 level. Okay, these two horizontal support levels almost to the penny and bounced and closed right back above, just slightly above the 170.56 level. We closed at 170.69. You see this? Don't let anybody tell you that these levels don't make any sense, that these levels don't work. You see it. How many times have you heard me say it closed almost to the penny? Okay? Almost to the penny. The penny. All right? We're closed just above the high, okay, of 20 back in 2020, the high of 2020, okay, March 2020, right before the corona collapse. We closed just above that level right now. That's that big, thick red line, the March highs of 2020. We got to keep an eye on that. If we break below that and close below that, you see we testing this here 168.90 level. We break below 168.90 level, I would not be surprised if we don't come back down here and test these lows. Be careful. Right now, be careful. It could be dangerous trying to go long right now. I know we got a file today. I know that. But it could be dangerous trying to go long right now. Be careful, okay? You see the IWM is closing below its 21-day moving average, and it's closing below its 5 and 9-day moving average. Be careful. You see it. Be careful. You see where it's at on the structure chart. The RSI, okay, the RSI, the Relative Strength Index, you can see it right now. It got rejected at the 50 level, okay? It got rejected at the 50 level, all right? So it's still on the wrong side of the 50-yard line. And here, so right here, it got up to the 50 and it got rejected. Right now we have 42.82. And we get back below this red dotted line, which is the 40 level, it could be a problem. It's already showing that the momentum is on the wrong side of the 50-yard line. The sellers are in control for the IWM. Look at this. Look at the checking money flow. It's in a negative and it's expanding. The money is coming out of the IWM. All right. Be careful. The momentum is shifting. The momentum is turning. The sellers are taking control of the momentum right now. All right. And look, we closing below the 5-day moving average. You closing below the 5-day moving average. The 5-day moving average is turning down. There is nothing to talk about. This thing is guilty to going down. All right. So look, I don't know how low it's going to go. It got levels that need to break. All right. We just talked about the March 2020 highs at that 170 level for the IWM. We talked about the 380 level for the SPYs. Okay. We talked about that. Okay. We talked about the Qs levels. You see this, the IWM, the stochastic, is giving us a bearish crossover. The yellow line is crossing below the crayon line. Be careful. The momentum is clearly shifting to the downside. If things don't change, this thing can fall apart. Okay. All I'm saying is be careful. It's a lot. It's right now, the weight of the evidence is starting to be to the downside. That's what I'm trying to say. Even though we got to follow through that, we at areas right now where it has to make a decision. Okay. Let's finish this thing up with the ITOT. We're going to make this very quick with the ITOT. You see, it's the same thing. The ITOT got rejection at the 21-day moving average right here. Okay. We closed below the 5 and the 9-day moving average. The only thing good, like I said, the volume yesterday was extremely high, but today it was below average. All right. But it's still, the price is closing to the downside. This is the only ETF that we have a short position on right now. Okay, we have a short position right now on the ITOT. All right, we have a short position on the ITOT. We closed out those oil trades that we had today. The oil numbers came out. We closed out those oil trades for a small loss. Okay, it broke back below lowest. Actually, lowest never signaled. It was an early entry. Okay, I tried to get in ahead of time, but lowest never actually signaled. I was trying to see if I was trying to anticipate a signal for lowest for a bullish upswing, but it didn't happen. It acted like it wanted to signal. I went in with a very small position trying to get an early entry on the oil trade, but lowest did not signal, but she gave a swing to the downside today, the continuation to the downside. I had to get out of it, okay? But going back to the ITOT, you see here we got a bearish crossover on the stochastic, okay? The stochastic gave us a bearish crossover. We closing below the 5 and the 9-day moving average on the moving average chart. Look, it's clear. Okay, the momentum on the RSI is on the wrong side of the 50-yard line. We have 43. Okay, 22, and the checking money flow is negative and is expanding to the downside. Look, it's clearly that the weight of the evidence for all the major market index ETFs is to the downside. Be careful, y'all. Look, we're middle traders. We're not trying to get in at the exact bottom. We got to let this thing prove itself. All right? Be careful. Be careful. Look, just watch all the levels, okay? Keep your eye on everything moving. If we look at the Qs, the NASDAQ itself, yes, look at it. You see where we closed at today? We right at this upward trend line going back from the March 2020 lows. See this trend line here? for 2 days now, we've been trading below it. We closed below it for 2 days. We tested this level right here, the 11,000 level on the NASDAQ. The actual index itself is what we're looking at now. A daily chart of the NASDAQ composite, the actual index itself, is finding support at a big round number, 11,000. Okay, a big round number. All right, that's important. If we break below the 11,000 level, then it could come back down and start testing this level here, 10,500. Okay, so think about what I'm saying. The actual NASDAQ itself, it found support at the 11,000 level, but it's still below these internal trend lines. Okay, going back to the March 2020 lows. All right, but 11,000 is where it's at. You see that for the NASDAQ itself, you see the Standard & Poor's 500, 3,800 level is where it's at. Okay, and then when you go down to the ETFs that track these indexes, right? Look at it. The Qs, 11,000 is the level that we got to be careful. When you look at the Qs, you got the $280.21 level that if that breaks, we can easily go to 269. So the Qs is right on a key support, and the actual index itself, the NASDAQ, is on key support. Same thing with the Standard & Poor's, 3,800 for the actual index itself. The Standard & Poor's, well, that support level is 380.54. We closed at 380.34. Right at key levels. Keep an eye on the indexes itself and the ETFs. You got to watch the indexes themselves. And look, just be careful. Do not, I repeat, do not get overzealous. This is not financial advice. I cannot give financial advice. I can only tell you what we're doing. But we are not, okay, getting overzealous and take too many chances, because this market is at a critical point. It could rally. We do have a follow-through day, but it can also collapse. It's sitting on major key support. Be careful, y'all. See you in the next video. We're going to do a part 2 looking at these weekly levels real quick. It's not going to take us long. You want to keep an eye on these weekly levels. This is a daily chart, and the daily levels we looked at for the ETFs and the index itself. Now we need to take a quick look at the weekly charts, okay, for the indexes, the ETFs, the major market index ETFs. See you in the next video, part 2.